Hello everyone and welcome to another edition of the Forex Technical Market Update. Today is Wednesday, May the 20th, and we didn't have an update yesterday. I was actually traveling, and I actually really dislike traveling. Well, I like traveling, but I hate the act of traveling because we did have a delay in the flight and I was at the airport much longer than I had anticipated. So we didn't have a update yesterday. But on Monday, I spoke about the fact that the euro needed to close above the critical resistance of 115.33, and the market so far hasn't been able to do that, and we're seeing that the market is actually selling off. And this market is actually below support. We have support at 111.31, and let me draw the line here. It's closing below that 111.31, and if it closes below this level is at 110.66, that would be fairly bearish for the euro versus the US dollar, and we could see further selling in this market. Even the market could even test the 104.50 region if this occurs. So we could get some further selling in the euro. Alternatively, this could be a small pullback and the market could rally again to attempt to break out of this level. So we're kind of in no man's land here. I mean, this market can go just about in any direction. But because the longer term trend, as you can see, is down, the longer term trend is down, my money would be on the downtrend continuing as opposed to betting on a reversal. So if we do get a close below this 110.60-50 area, that to me would be fairly bearish for the euro versus the US dollar. Taking a look at the British pound, we see that although the euro dollar is having some weakness, the British pound is actually seeing some strength today. So while the euro is down versus the US dollar, Australian dollar is down versus the US dollar. The Canadian dollar is unchanged. The Japanese yen is down after it broke out of this triangle. The British pound is actually up on the day, and the pound pairs are doing fairly well. Namely, the market we have been speaking about over the last couple of weeks, the British pound Australian dollar is rallying here on the day, and the British pound Japanese yen is rallying on the day. Taking a look at the British pound Australian dollar, let me just redraw the triangle that occurred. We had a triangular consolidation pattern in the pair, and what happened, just to revisit what happened, the market broke out of the triangle. We had a breakout here. Well, we first had a breakdown, but the market did not, there was no follow through, and this was actually a bear trap where folks sold the market and the market just rallied right back up. But we broke out of the triangle in the 194 region. The market went up. We got a retest of the triangle and the market is now rallying, and that is just textbook technical analysis. This is how the market is expected to behave if you follow technical analysis. Next area of resistance is in the 198 area, and then ultimately in the $2 area in the British pound Australian dollar. If you are swing trading or day trading this pair, it will be actually good to be buying dips. For example, this was a pretty good 4-hour chart. We had a low here, a high here. If you label this A, label this B, this was a swing retracement, and the market is now heading back up to the north side, and we expect it to take out this 198 level. Okay, taking a look at the gold market, and this is another market that we had a initial breakout of the channel, and the market has swung right back into the channel. So when you are trading these markets, you definitely can get false breaks and false breakouts, and you just have to be aware of them. So just because a market breaks out of a certain region does not necessarily mean it will go in the direction. Markets often turn around, and that's why we use good risk management tactics, or practice proper risk management. Um, for anyone who has been listening to these briefings for a while, you know that I am big on risk management and the importance of risk management, because you should not be risking more than 1-2% of your equity per position. And if you are risking 10-15% of your account equity per trade, you will eventually blow your account. I mean, you may have good days where you are up big, but eventually what will happen is that you will hit a string of losses, and that will eventually wipe out your account. One of the reasons why folks aren't successful in trading is not because they have a bad strategy per se. It's the risk management is often poor, and even if you have the best system, the best strategy, if you have poor risk management, you are likely to run into trouble. It's like someone who has a Mercedes S-Class. It's an excellent car. I drove in one recently, and it's very good. It's a very excellent, comfortable car. But if I put a 4-year-old behind the wheel of that car, then they are likely to crash the car. There's nothing wrong with the car. It's just that they don't know how to drive the car. And that's often the case with some of these systems. There are good trading systems out there that are available, and folks just do not know how to use them. And that's why they are losing money in the markets. Okay, let me get off on my soapbox and let me look on a detailed analysis of the British pound, Japanese yen. As we can see, the market rallied above resistance at, let me just draw the resistance line. Market rallied above resistance in the 185 area, and the next area of significant resistance in the pound yen is just below 190. The actual high on the pair is 189.71, and if we're able to close above this 189.71, that could open up this market for further gains. Remember, we're in a broad uptrend. This is a daily chart, and we're in a broad uptrend. So you will definitely find more success being on the long side of this market rather than the short side of the market. Okay, so this is an opportunity for profit. Another opportunity for profit we are looking at, and this trade hasn't materialized yet, is this Australian dollar New Zealand dollar pair. We're currently at the, let's look at the Fibonacci retracement. We're currently at the 618 retracement level, and if this retracement level is able to hold and we get a sell signal out of this market, that could be a good long-term position on the daily charts. So this is definitely a market we're looking at. We're also looking at entering in the euro. If this market continues to break down, this will present itself as a good short opportunity, and we just want to see how the market reacts to this 110.60 region. So remember, there are times to trade, and there are times to just observe what's happening in the markets. And we're currently, in our portfolio for our members, we're currently long British pound Australian dollar. This is a couple hundred pips profit. We're long the British pound Japanese yen, and we're looking at a good opportunity to short the euro if it presents itself, and the Australian dollar, New Zealand dollar. And we have some other positions that our members will see in their accounts coming up shortly. Okay, so if you want to have these signals traded, remember, click on the link below and get started. Folks who take action are the ones who are normally successful and are the ones who will see positive growth in their account. It doesn't make sense you sit on the sidelines forever. Take action, because you can start with a small amount, see how the signals work, see if they are profitable, and then you can step up to a larger amount if you are comfortable. And the first month is relatively cheap, so get on a board, and I hope you have a wonderful trading day. Thank you.